Good day, we are from Group 7. My name is IZZUDDIN, metric number 2212222149. Wants to present about introductions of Gamuda Berhad. Gamuda began as a small construction company and has grown over the years into the multi-phase organizations that is well known for its involvement in some of the nation's biggest infrastructure projects. One of its greatest achievements, the Klang Valley MRT project. Driven by a mission to deliver sustainable value, Gamuda upholds and values like taking personal ownership, integrity, and demonstrate real teamwork. Their commitment extends beyond construction to ethical practice in areas of human rights, risk management, and anti-bribery and anti-corruption. The company's strength lies in its robust management structure, from a visionary board of directors to dynamic C-level executives and dedicated teams. Gamuda operates in 3 core sectors, which are construction, property development, and infrastructure, each marked by innovative and quality-driven projects. That's all for me. Thank you.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is SYABIL AQWA and my metric number is 22122060. So now I will talk about a vertical and horizontal financial statement. For company Gamuda Berhad, we collect data about total asset, total liabilities, and total equity. We collect all the data from a financial position of Gamuda Berhad company. So we go to the cost of sold for year 2021. The cost of sales sold for year 2021 is RM244594800, and cost of sale sold for year 2021 is RM256005400. So we go to the cost of sale for year 2021 is RM3304481000. So now we go to the gross profit for year 2021, 2020, and 2019. So now we go to the gross profit for year 2021, which is RM121701600. For gross profit for year 2020, which is RM110291000. So the last one is gross profit for year 2019, which is RM126058100.
Hi, my name is Muhammad Syahmi Arif bin AMIR. My matrix number is 221220681. I will be presenting Gamuda Berhad liquidity ratio. Liquidity ratio is used to determine a company's ability to pay its short-term obligation without raising external capital. For this, we have calculated the current ratio and the quick ratio for Gamuda Berhad. Current ratio measures the ability of a business to meet its short-term abilities with its short-term assets. From the table, it shows Gamuda Berhad current ratio is having an upward trend where it keeps increasing for all 3 years. 1.58 in 2019, 1.62 in 2020, and a huge leap to 2.21 in 2021. Next is quick ratio. Quick ratio gives a better measurement of a company's liquidity by excluding stocks from its current assets. From the table, we can see that Gamuda Berhad quick ratio also seeing an upward trend over the years. 1.43 in 2019, 1.46 in 2020, and 2.03 in 2021. Having a good liquidity ratio means that Gamuda Berhad will be able to continue its business without being in the red. Thank you.
Hi, my name is SOPHIA JAFFRIE. My metric number is 2212200818. Gross profit margin is a financial metric used to assess a company's profitability. The formula of gross profit margin is net sale minus cost of goods sold. The increase in Gamuda Berhad's gross profit margin from 27.61% increase to 34.60% in 2021 reflects the company's ability to effectively manage its production costs and generate higher profits from its core business activities. Next is net profit margin. Net profit margin is a financial metric used to measure a company's profitability by evaluating the percentage of profit it generates from its total revenue after deducting all expenses, including operating costs, taxes, interest, and non-operational expenses. Net profit margin equals to net profit divided by net sales times 100%. Through our calculation, we can see that there could be several factors for the net profit margin in year 2020 dropped to 11.85% 58%, such as industry-specific problems or economic challenges, but the net profit margin significant increase to 17.97% in the year 2021 shows an important recovery. This recovery shows Gamuda Berhad successful cost controlling strategies, gain more revenue production, or increase effectiveness in operation. Return on equity, as known as ROE. ROE is a financial ratio that measures a company's profitability by evaluating the efficiency with which it utilizes shareholders' equity to generate profit. The formula is ROE equal to net income divided shareholders' equity times 100%. The success with which a business makes money from of the equity owned by its shareholder is reflected in its return on equity. It is reasonable to be worried about the ROE fall from 8.89% in 2019 to 4.73% in 2020, which shows a decline in the company's profitability in relation to shareholder investment over that time. Although the partial recovery to 6.64% in 2021 is encouraging, more can be done. Higher ROE is often the goal of businesses in order to show the equity is used effectively. Increasing operational effectiveness, streamline the capital structure, or looking for expansion prospects are some ways to improve ROE.
My name is Muhammad IZZUDDIN NURIMAN bin TOHANI. My metric number is 221220657. I will represent this group to talk about activity ratio of Gamuda Berhad. Activity ratios are financial metrics used to gauge how efficient a company's operations are. In activity ratio, we have account receivable turnover ratio and inventory turnover ratio. Firstly, we talk about account receivable turnover ratio. The account receivable turnover ratio for 2019 is 2.42. It means that Gamuda Berhad collect its receivable approximately 2.42 times a year on average for year 2019. The previous year, the ratio dropped to 1.76 in year 2020, showing a decrease in receivable collection. This could be because of change in economy, or maybe because they focus on good quality project more than building the company. In year 2021, the ratio climbed slightly to 1.77, showing a slight increase in profitability, but the turnover of the ADRIANA become lower. Now let's talk about inventory turnover ratio. The formula is cost of sale divided average inventory for each year. Inventory turnover ratio 2019 is 5.26. It estimates that Gamuda Berhad sold and replaced its stock 5.26 times in the previous year. The ratio dropped to 3.04 in year 2020, showing a slowdown in inventory turnover. Change in demand, delays in the supply chain, or change in production level could be the reason of reduced ratio. Inventory turnover efficiency was still low in 2021, which is 2.83. This could be a sign of overstocking, fewer consumer needs, or difficulties in controlling inventory levels.
Good day. My name is Liu Qiaoyan. Metric number is 221222827. Today I will present the gearing ratio, which are debt to equity ratio and debt to asset ratio. I will also present the recommendations part. The formula of debt to equity ratio is total liabilities divided by total equity. The debt to equity ratio evaluates how much of a company's funding is provided by debt as compared to equity. We can see that from our calculation result, with a debt to equity ratio of 1.03 in year 2019, the Gamuda Berhad had 1.03 units of debt for every unit of equity. This suggests that equity will have a little larger impact on the capital structure. Then, the debt to equity ratio increased to 1.07 in year 2020, showing a greater percentage of debt in the capital structure than the year before. The rise can be a sign of higher debt or lower equity. Lastly, the debt to equity ratio decreased to 0.94 by year 2021, showing an increase away from debt and toward a higher percentage of equity. The debt to equity ratios decreased between year 2019 and year 2021 shows that Gamuda Berhad has been successfully managing its debt levels, which may lower financial risk and increase financial stability. Next, the formula of debt to asset ratio is total liabilities divided by total assets. The debt to asset ratio calculates the percentage of debt used to finance an organization's assets. With a debt to asset ratio of 0.51 in the year 2019, Gamuda Berhad's assets were paid for by debt to a percentage of 51%. This refers to a high reliance on debt to finance assets. The debt to assets ratio climbed marginally to 0.52 in the year 2020, showing a small rise in the percentage of debt used to finance assets over the previous year. Then, the percentage of assets supported by debt decreased to 0.48 by year 2021, which is shown by the debt to asset ratio. This decrease refers to a possible improvement in financial stability and a decrease in the need for debt to pay for assets. Gamuda Berhad seems to have been managing its debt levels compared to its total asset value, based on a decrease of the debt-to-asset ratio from the year 2019 to year 2021. In general, a lower debt-to-asset ratio means more stable and less risk financial. From the point of investor, we had also calculated the intrinsic value per share Gamuda Berhad by using Golden Growth model to compare with the current market value. The intrinsic value per share for Gamuda Berhad is RM2.4, while the current market value per share for Gamuda Berhad is RM4.84. Therefore, we can note that currently Gamuda Berhad's current share price is overvalued. In addition, we had calculated the price to earning ratio of Gamuda Berhad is 38.92, which higher than benchmark of 20, means that the investor is required to use 39 years to collect back the amount they are invest. To conclude, we would like to recommend potential investor not to invest Gamuda Berhad, as there is a lot of investment tools such as fixed deposit, mutual fund provide more stable and steadier 4 to 7% return per annum.
Based on the result, we can know the Gamuda Berhad had good liquidity, high profitability, moderate activity ratio, and gearing ratio. In the view of management, Gamuda Berhad must minimizing its operating costs, managing its inventories properly, generating the profits, controlling the debt level to perform better in final year 2023 and future. To minimize the operating costs, the Gamuda Berhad can implement a reasonably good budget constraints for their construction project. In addition, with the expenses policy by Gamuda Berhad, the management must control their construction costs to avoid extra operating costs. To generating more profit, Gamuda Berhad must come up with certain new ideas on their constructions to continue to develop attracting building for the buyers. That's all from our group. Thank you.